The third company now is True Gold. Interestingly enough, this is another, everybody's a little bit farther forward in the development. Bill's working on a pre-feasibility, Ira just reported on a feasibility, and Christian's going to tell us about his company, which is actually starting to dig the stuff out of the ground. Is it on pads yet? Very soon. Couple of weeks. True Gold is another company. It was originally Riverstone when I started following it, notwithstanding some recent political hiccups everybody knows about, of course. Burkina is always a place I've been quite fond of. It's got great gold belts and great gold deposits. And I think it's going to be one of those places that's probably underloved right now, but I think you'll see the miners deliver, as many people in production already have, and that you'll see the optics, I think, improve for all of these companies, and I'm hoping True Gold's going to be one that helps turn the perception around, and Christian's going to tell us how.
Thanks, Eric. Yeah, I think this is really opportune timing. I joined the company in April last year. I'd been working in West Africa for about 4 or 5 years with Endeavour Mining, and we've kind of built up an executive team and brought this project probably out of the into the news again. I guess it was kind of quiet last year. There was a down period, and we got construction going again in May. And obviously, the headline risk in that around Burkina hasn't been helpful recently. Fortunately, it hasn't really affected the project. I even went back in and bought some shares on Monday because of the problems on Friday, and it didn't affect our business in any way at all. So I just want to give you a bit of an update. Mine's a slightly different focus in terms of the presentation. It's a lot more pictorial because right now, today, literally this morning, we got our agglomerator going. We had the power plant going 2 days ago. It's going 24/7, and we're ready to start stacking literally in weeks here. So it's a really exciting period of time. Nervous as well. We're all ramping up, and everyone knows there's challenges with that, but we're in a really good place today. So I'll run you through that quickly. And actually, one thing I want to say about our title page here, we certainly put on here, and we unabashedly so, we want to be a mid-tier producer at one point. We're starting out with a nice base project here in Burkina Faso, about 120,000 ounce producer, but really our goal is to build a mid-tier miner. Myself, David Lang, and Peter Hardy, who's just joined from Nevsun, have been involved with building companies over the past, and particularly with West African experience, and I think it's really important in the region. Cautionary statement, as everyone showed you, I'll go by that quickly. So we think we're in quite a unique place. I mean, there was probably about 6 companies pouring gold in the next in the 12-month period. Now we're down to sort of 3 or 4 pouring gold in the next 3 to 6 months. And really after that, there are not many junior producers who are actually financed, permitted, and building mines. So we think we're in quite an interesting space, and I'll show you the valuation opportunity at the end of this as well. This is a nice, strong foundational project. It has an 8.5, 9-year mine life currently. We think we can make it into an 11-year mine life later this year when we do a bit more drilling, and then there's lots of opportunity beyond that. And this gives you an idea. We're about 1 million ounces almost at the moment in terms of our reserves. We plan to expand by drilling off North Cow, which is in the inferred stage at the moment, and that'll make it an 11-year mine life, and that hopefully will be done close to the end of this coming year, 2016. And the exploration upside, our geologist, certainly our head of geology, he's just excited to get back at the drill bit. We haven't given him any money this year. We've got to get our construction done before we get back to the drill bit, but I'd call him effectively a frog in a sock at the moment. He's just desperate to get out there and really get drilling again. And I'll show you a little map of the property soon. In terms of the overall project, if you're not familiar with it, about 110 to 120,000 ounces, $700 all-in sustaining cost. So again, a nice margin, maybe not quite as nice as a couple of the peers here. That's about a $265 million of after-tax free cash flow, a little bit higher gold price there. It's a really simple open pit heap leach mine. It's got a nice long mine life, a high margin. It's free dig. There's no drill and blast effectively unless you're at the bottom of the pits. And we're also doing owner mining, which makes a huge difference in our costs. And people do question those mining costs, but it makes a big difference. And the other thing is it's a low strip ratio. Obviously, that contributes to it as well. And the recoveries are good, not quite as good as Kaminak, but not far off. And power requirements. And in West Africa, that's a really important factor. I've worked with CIL plants in West Africa, and this is about one quarter to 1/5 the amount of power required. We've got all our gensets in place, and obviously the fuel price down, we're benefiting a bit from that as well currently. We've got all of our water supply as well. So looking at the overall project and the size of the property there, you can see our barrage where we capture our water in the bottom left. We pipe it up to the actual ponds, which we keep really close to the plant site. They're all full. I'll show you a couple of pictures of that in a minute. Our leach pads are there. Our first pit is Guligu 2, which is that long sort of orange structure there in the middle, just above. It's about a couple hundred meters from the actual leach pad and the plant site. The ADR plant, you can see in the top right, is actually pretty much constructed now as well. We're actually, today, we're probably 93 or 94% complete, not 90% as we were last week. We've got about $24 million left to spend on the actual project and about $40 million in cash and the remaining Franco and Sandstorm monies. And I think another thing that we did was early this year, we actually put in place another $10 million from Oramet, which is a more traditional fixed cost financing. We thought it would be safe and a good thing to have a little extra money. It's available for exploration as well as we move forward. And I think I just really want to walk you through some pictures because I think they really do tell 1,000 words in our case. When I first went down there in May, I lived down there for about 2.5 months, working with the government to get the project back up and running and really getting into the community to get to know people and that. And really it was just open field with a few trees, baobab trees and that. And just the progress in the last 6 to 8 months has just been astounding for me. When you look there on the left, you got two pictures of our first open pit. That's GG2. We're down a couple of benches and now into sort of above reserve grade material. We actually have a 350,000 ton stockpile at the moment ready to go, and it's grading just under 1 gram, and our reserve grade over the life is 0.9, so looking pretty good. On the right, you can see the gold room. That's now actually fully bricked up, and you can see the vault door at the bottom, which is actually a really important milestone for us. We're almost ready to receive gold there. On this page, you can see the agglomerate on the top left. People keep asking me, how's your mill going? How's all that going? I said, there's no mill here. This is simple. This is an agglomerator sitting on rubber tires. There's no girth gear. It's a much simpler sort of structure than you would be with a traditional CIL. There's no tailings as well. And there's the agglomeration drum. It turned this morning for 3 hours. That was our first test of it. The conveyors on the right with the grasshoppers, you can see out there on leach pad 1. And they're actually turning this morning as well. We're just testing the belts and that. Bottom right, we have our cement silos. We need quite a bit of cement, so those are up and ready to go. And you can see the guys on the pond there in the bottom left, which is really pleasing to see the water there. A couple of before and after shots. So we shot this in June 2015. We just started clearing the site for the raw water pond. That's almost 400,000 cubic meters of water there in the bottom right. It's a huge pool. It's really a great sound in Africa there to hear all that water running, sitting at our site and available. And it's actually, I think everyone's kind of keen to go swimming, but we're trying to keep them out of there. Heap bleach cells, again, it was just a clear field. That's actually after clearing the topsoil off, but you can see in the bottom left and the right now we've got our aggregate layer on and basically ready to receive material. We've got our drainage all set up and that ready to go. So hopefully by the first week of February we'll actually be stacking. Looking at the process ponds again, this is our barren, intermediate, and our pregnant solution ponds on the bottom left. And basically a big transformation there over a few months. You can see also on the right there going from really nothing on the ADR plant in July up to sort of a fully finished plant there in the bottom right by December. And I think the other thing that's quite exciting, and for me the attraction of coming from sort of a mid-tier player to this company, we thought this was a really interesting foundational asset. And when you look at the actual property, it's 900 square kilometers there in that map. You can see the exploitation permit. It's a small portion in sort of red. It's hard to see, but you can see the sort of 6 pits there. When you look over this property, it's already got a 1 million ounce reserve. Some of the drill holes in the callouts, you're looking at sort of 2 gram material over 70 meters, 6.6 over 7 meters, 12 grams over 5.6 meters. Our reserve grade is 0.9. So we think there's a lot of interesting areas. There's a lot really close, and really the 2 areas we want to look at next are right in that cow trend. It's slightly green shaded. We've already found, we have the cow pit, we have the north cow pit. Now our exploration guys are saying it's the holy cow pit. We think there's a south cow to go there as well. And then when you go up into the top, actually, we think there could be even a whole new mining center. But again, there's no money being spent until we get this thing up and running. And in this market, no one will forgive us if we don't get it up and running with the money we have currently. And then I think in terms of the valuation proposition here, if you look at that graph there, and that comes from one of the bankers, we're trading at sort of just under 0.4 times NAV. We're almost up and running at this point in time. We hope to be pouring gold by the end of March. If we're lucky, we're a little ahead of schedule. Maybe we'll be a few weeks early. And you look at some of our peers who are either just into production or been producing for a few months now. There's a valuation gap to close even at today's gold price. And our goal here is to show people that this will be a $700 all-in cost mine producing 100 to 120,000 ounces over a nice long mine life. and a lot of upside. And we think that that's our job over the next 6 to 12 months, is close that valuation gap. So we're currently at about 26 cents. I think I joined in April, it was at about 18 cents, maybe 17 cents. So we've had a decent run. It's been up and down over the last little bit with the gold price, but seems to be firming up. And if you look at this next slide, it gives you an idea. It's up about 20% over the last 12 months, and that's been a challenging 12 months for the company, but I'm pretty proud of actually what we have there. You see the first spike up. That was when we got back into construction there in May. You see the next sort of spike up in sort of October. That's when we started mining. I hope in the next sort of couple of weeks we'll be announcing stacking ore on the pads, and maybe we're lucky and we get another spike up if gold can hold where it is right now. And then in terms of our actual capital structure, for those interested in it, we have about 400 million shares outstanding. And something of interest is we've got two large shareholders. Liberty owns almost 20% out of Boston. They've been a really supportive shareholder over the last few years. And Teck owns about 11.4%. And they're actually interested in one of the properties I haven't even mentioned today, and that's why they came into it. So, we've got another property after we finish with Karma that we want to look at. But so we've got two larger shareholders. Mark still owns about 2.7%. And after that, it really drops off in terms of institutions. M&G, I think, owns 3, 4, maybe 4.5%. There's a couple other institutions that have been building small positions, maybe at about 1%. But really after that, it falls off to a lot of retail and spread out hands. And we think it's a real opportunity in this current market. We'd like to be a good news story this year. And we've got some good coverage there as well, with a lot of the Canadian banks being well represented. And that's it for me. But I think, it's an exciting year. I think I agree with Eric. I think hopefully here we got a nice outlook for gold in this current choppy environment. So thank you.